Hi, once again, everybody. Welcome back to Markets on the Move. I'm Marlin Bohling with Oliver Sloup of Blue Line Futures. Well, we'll take a look at how we opened up the week. Interesting stuff coming out of the Sunday evening trade here, Oliver. We kind of had a curveball affect the grain markets there, and the big winner seemed to be soybeans. Let's talk about the market impacting factors here as we came out of the weekend. Maybe you can describe what happened.
Yeah, so obviously Sunday night opened up and it was kind of lackluster on benign weekend weather, which has really been the theme really over the past several months. So you saw grains kind of opening up with a softer tone, and then I went to bed, but at 10:20 or roughly around there, President Trump had a Truth Social post with regards to China and soybeans and them making up the deficit with soybean purchases. So you saw soybeans jump sharply higher last night, carried over into this morning's trade. It took corn and wheat with it as well. Corn was able to hang on to small gains today. Wheat actually was closer to unchanged, but beans holding on to the gains was really encouraging. I think the big takeaway here is, did anything fundamentally change? No. This is a lot of talk and headlines right now, but what it does do is it opens the door for additional potential headline risk, which would come to the upside, whether that comes from more posts or just talking about it from President Trump or from China, whether Xi wants to kind of join the dance or not. I wouldn't be surprised to see more headlines to come regarding this.
So this was all driven by a tweet.
Yeah.
Anything, well, I guess it'd be on Truth Social, but is there anything underlying that would support that claim?
There really isn't at the moment, but again, I think it just opens the door for potential upside headline risk. And when you're looking at portfolio managers, they look at their position and say, well, do we really want to be aggressively short soybeans here when we have risk of headlines popping up now out of the blue, which are really, quite frankly, unpredictable. And really, we've seen that across a lot of commodity markets since the start of the year. You get these trends and these trades going, and then bam, it just reverts right back with a random headline. So I think at the very least it's kind of a cause for pause for funds and maybe not push the pedal to the metal so aggressively, which it might be a good thing for soybeans if you're bullish the soybean market. Funds had been really kind of flat soybeans for the better part of the year. They hadn't had a net long or a net short position outside of 50,000 contracts until last Friday's commitment to traders report. They were net short about 65,000 contracts. So it looked like they were building momentum to the downside, but potentially this kind of puts that on the back burner for now.
Well, it was kind of odd to have a big move like that ahead of a WASDE report coming out. And I just wonder if there's a setup for a turnaround Tuesday now with everything that took place here on Monday.
It's going to be really interesting. Historically, this August WASDE report has leaned a little bit more bearish on soybeans. Obviously, anything can happen tomorrow, but I believe 9 out of the last 10 years we've seen soybeans trade lower on the back of this report. August, very important time of year. So I think we really need to see a weather story start to develop if you want to see more upside in this market. And we can take a look at the chart here. I'll share a screen, and we can look at November soybeans and where some upside potential targets would be if we were to get a story. As you can see here, we got out above $10, which was encouraging, and closed just above the 20-day moving average, which is that purple line right there. If we can get some momentum above trend line resistance here, I think it opens the door for a potential retest of some of those major moving averages from 1022 to 1025. That includes the 50, 100, and 200 day. So if we can kind of push off a potentially bearish WASDE report and kind of feed on the strength to start this week's trade, those are some upside targets. But if we're to get there, I think you're going to want to capitalize that and maybe potentially look at some downside protection from those levels.
Well, if it hadn't been for the big rally in soybeans, do you think corn could have maybe been lower on Monday?
I think corn, it wanted to start the week lower. We'll pull up the corn chart here. Corn still has some work to do. You and I talked about technical resistance last week coming in from about 408 to 411. Those were the lows from mid to late July, and really where we started accelerating lower to start this month's trade. Now we're right back to the scene of the crime. We need to see consecutive closes out above 408 to 411 to kind of get the momentum moving back higher. There's trend line resistance and some major moving averages well above the market. So if we can get out above some of those old support levels, which are now resistance, maybe we can get some momentum going. Seasonally, this is a fairly choppy time of year. The 5-year average shows a bottom here, but longer-term price averages shows a continued bleed lower. So I think it's a little bit of a coin flip here. Wouldn't be surprised to see us consolidate, trade a little bit sideways. The yield numbers obviously going to be very important tomorrow. Average analyst estimate right around 184.3. That's about 3.3 bushels above where the USDA was in July. And I thought that's a pretty big adjustment for this time of year, but I was looking at historical adjustments. I think in 2016, they raised it about 7 bushels per acre in this report. So nothing's out of the question. Once we get those numbers, we'll trade them for a little bit. And then what I'm excited about is really turning the page. Next week, we'll be on the Pro Farmer Crop Tour. So it'll be the first look at boots on the ground.
Well, we did have a few news items that affected the grain production over the weekend. We had some big damaging windstorms and hailstorms in parts of the western Corn Belt from Nebraska all the way up toward Wisconsin. Now, they were localized, but it also brought quite a bit of rain in that area. So it's like a lot of the western part of the Corn Belt is not really hurting from moisture right now. So it was kind of a good news, bad news scenario. I did hear several stories over the weekend about sudden death syndrome affecting soybeans, especially in Iowa. Are you hearing about that?
I had heard some small rumblings of that. I haven't heard it in mass, but it's certainly something to pay attention to, especially this time of year. As we'd mentioned, a lot of big weather developments could potentially take place and have big impacts on yield for soybeans. Corn, it's getting a little bit late and still change things a little bit, but soybeans, it's really go time. So that'll be something to keep a close eye on going forward, no doubt.
Okay, when we wrapped up last week, we had the cattle market completely collapsing. We had limit down moves in the feeder cattle last Friday heading into the weekend, and then we get to Monday, and it's like, whatever. Didn't do much on Monday. So what do you make of that kind of a sleepy reaction?
Yeah, we'll pull up the cattle chart. October live cattle we've got pulled up here, traded right down to the 20-day moving average. Obviously, we had expanded limits today because feeder cattle were limit down on Friday. Thankfully, probably for everybody's sake, we didn't have to use those expanded limits because they were pretty wide. I think it was 10 1/4 for live cattle and 13.75 for feeder. So we avoided that. But I think the big question is, still what's this market going to do going forward? And I don't have the crystal ball, I can't tell you, but I do expect a lot of volatility, and we saw a glimpse of that last week. One of the things that I've been really, really nervous about is just the market structure with funds so aggressively long. When you get funds that lopsided on one side of the market, when they decide to exit, there's really nobody there on the other side to buy it because they're already all long. So regardless of how bullish you are, that should be a little bit of a concern for you. And I think it's still prudent to look at some downside protection. We like using the option strategy. Or if you're going to use futures, maybe hedge off the futures margin risk with some call options. So something to keep an eye on. Volatility is going to remain high. We're hearing some headlines, too, that Secretary Rollins might come out with a screwworm update here in the next week or so, and I wouldn't be surprised to see that maybe play a little bit of a role in price action this week as well.
Would that be good or bad for the market, do you think? I wonder what that's about.
Well, if I had to make a guess, it would be bad, and I think the market's probably trying to tell us that. I would have to go back and find the clip for sure, but she's kind of building it up to be a pretty big announcement, and I think that's what really cascaded the selling pressure at the end of last week.
Wow, okay. So what about hogs? They've been kind of caught in the middle.
Hogs have been caught in the middle. Relatively quiet, choppy trade, caught right in the middle of the 20 and 50-day moving average, actually, which is, again, what we talked about last week. And joking around with clients, it's almost like the hog traders are just kind of sitting on their hands watching all the fireworks in the cattle complex. So hogs, I think, are probably a little bit closer to an equilibrium. If we break out above the 50 or below the 20, potentially we can see an acceleration of that move. But for right now, sideways seems to be the path of least resistance.
Last week, I was talking with you before we started our recording on this episode here, and I heard so many analysts across social media and just all kinds of outlets last week where all these analysts were really pumping the bullish side of gold. They said it was going to make a breakout and it could go multiples higher on the gold. And then we came in today and it was like they just punished the bulls on Monday. And it's like they were ready for the scalping or something. What took place in the gold? What prompted all that?
Yeah, we'll pull up the gold chart here. Obviously, a big reversal off of last week's high when we got the tariff announcement that gold was going to be tariffed, and then the administration kind of walked that back. So I think you have that adding some headwinds to things, as well as the rebound in the U.S. dollar here today as well, kind of adding some pressure. And if you zoom out and look at this chart, we're still range bound. We tested the top end of the range almost to a T, and we failed to get out above there. So again, I think it's a value trade and a kind of a trading range where you get towards the upper end of the range, you sell it, you work back towards the bottom end of the range, and you buy it. I'm still a long-term gold bull, but we found ourselves in this nice little trading range where you have pretty good risk-defined setup. So I think patience here is probably a key thing. Looking at the weekly charts, I think gold is traded mostly sideways about every 2 weeks. Last week was the second positive week. We haven't had 3 consecutive up weeks since March. So again, just kind of setting back into that trend, see if we can't go retest the low end of the range and present a better value opportunity to the long side.
Do you think the market is trying to thin out the bullish herd a little bit before it can resume its uptrend, or what?
Markets tend to do that. Every time you hear people, kicking and screaming about, oh, this market's about to go parabolic, or oh, we're never going to rally again, those are usually signs of tops and bottoms, or at least in the near term. So, yeah, I think shaking the trees and a little bit of a cleansing period is a healthy thing for the market, and I think that's what we're seeing here today.
So how did that compare to the movement in the dollar and the equities here to start out the week?
The dollar is firmed up a little bit. Equities have chopped around. We've got a lot of economic data out this week. We've got CPI tomorrow, PPI on Thursday, and then we've got retail sales on Friday. So I think the outside markets are kind of just in wait-and-see mode for some of those inflation data points to kind of give us an idea what the Federal Reserve might want to do next.
Is the market still leaning toward maybe a 25-point drop next time?
Yeah, the markets are pricing into potentially 3 rate cuts, so that's going to be a moving target. But right now, it seems like the CME Fed Watch tool is almost dead set on 2, and there's a growing likelihood that we could see 3. And we keep talking about these rate cuts. It seems like everybody's been talking about them for the last couple of years. And the outside markets have done a pretty darn good at shrugging off a lot of the noise. So you might get the knee-jerk reaction on some of these economic data points. But I think the more important thing is just the overall market sentiment at this juncture. I think there's a lot of complacency. We saw a little blip of volatility here over the last week or so in the outside markets. It was quickly undone. Now we're back to that complacent mindset. I wouldn't be surprised to see the back half of August hold a little bit more volatility.
Well, things are happening fast and furious, and look forward to talking with you. Let's see, we'll talk again on Wednesday on the other side of the WASDE report, and of course, between now and then, we'll also get crop condition updates, and you know what? We're not very far from getting harvesting underway, too.
That's absolutely right. We've got clients down in Texas who have wrapped up harvest, so starting to get some final numbers across the board.
Wow, that's coming in a hurry. And as you mentioned, you'll be on the crop tour next week, I guess, on the eastern leg, correct?
Pro Farmer Crop Tour. My partner Rob and I will be driving down to Ohio Sunday, and then the official start is the 18th. We'll be doing a lot of live updates from the fields. So if you want to get signed up for those live updates, head over to bluelinefutures.com. From there, you can select Market Research tab for a free trial. I'll be covering the grains and livestock as I always do, and then my other colleagues and partners here put out a lot of great information on the energy markets, precious metals, indices, etc. So it doesn't matter if you're only trading grains or you trade a lot of things. We've got a lot of great information on a daily basis available.
Awesome. Look forward to it. All right. Thanks, Oliver. I appreciate it. Oliver Sloup of Blue Line Futures. Well, that'll do it for this episode of Markets on the Move. We thank you for joining us, and we'll catch you on Wednesday with another episode.